Come on, Venezuelan oil is just tar. On January 3rd, Venezuela lost its president, and last Friday, they lost their oil too. But don't worry, while their former president was a real dictator, their current oil is not real oil. The new government just ended a 25-year state monopoly. They handed the keys to the private sector, and mostly to the Americans. The irony is brutal. Venezuela sits on more reserves than Saudi Arabia. But while the Gulf is building the future, Venezuela is broken. Why? Simple. As Trump himself put it, we are buying tar from Venezuela.
But we're buying tar from Venezuela.
So, why is the US rushing back to buy this garbage? For everyone new here, we don't guess about the invisible hand. We track that visible hand. If you're looking for political conspiracies, you're going to be very bored. We don't do drama. We reveal the mechanics. Still here? Good. Let's run the numbers. The catch comes down to one simple number, API gravity. Think of it as the Milkshake Index. Saudi light crude is the regular setting at McDonald's. You pull the lever and it flows smoothly. Then there is Venezuela. Most of their record-breaking reserves sit below 10 degrees. This is the extra thick setting. If you try to dispense this, the machine groans and jams. The sludge is so dense, it refuses to flow. You have to call the store manager just to force it out. And that manager? He isn't cheap. He has expensive heating equipment and imported solvents. To dilute this sludge, Venezuela imports light oil from the US. Think about that. They have to buy oil just to sell oil. This drives costs through the roof. And without that help, it's not even liquid. At room temperature, it's a hockey puck. Most customers won't wait for the manager to melt a hockey puck. They'll just ask for a refund and go to the McDonald's next door. Now, looking at that black sludge, you might wonder, wait, is it stronger? Like a triple shot? Does it pack more energy? I wish. But this isn't rich, it's dirty. Heavy doesn't mean powerful, it means toxic. The thickness of this shake doesn't come from extra milk or sugar. It comes from things the market doesn't want. Sulfur, vanadium, nickel. This isn't a cup of concentrated coffee. It is a barrel of oil mixed with half a barrel of rocks and toxic waste. So, not only is it a nightmare to pump out, but once you have it, it tries to destroy the refinery that cooks it. It drives the cost of its oil to $30 to $40 a barrel, plus a 30-minute wait. Meanwhile, Saudi Arabia's regular shake, $3 to $5, grab and go. Saudi Arabia is offering the US a perfect shake for pennies. Meanwhile, Venezuela's machine is broken and serving sludge. So, why is Washington obsessed with the sludge? A broken oil industry means a broken price tag. When a country's infrastructure crumbles, their negotiating power crumbles with it. The barrier to entry doesn't just lower, it vanishes. For a strategic investor, this isn't just about buying oil barrels. It is about securing access for pennies on the dollar. Sure, fixing the infrastructure is a headache. But let's look at the unit economics. The geology hasn't changed. Getting the oil out of the ground is actually cheap. Experts estimate raw extraction costs at just $12 to $18 a barrel. Now, let's be conservative. Factor in the transport, the processing, the quote-unquote hassle tax. Your real break-even price sits somewhere between $35 and $40. As long as the global market stays above that $40 floor, the project prints money. And with oil currently trading at $65, that isn't just a profit margin, that is a $25 safety net per barrel. It is a classic distressed asset play. Buy it broken, fix the flow, and pocket the spread.
So, cheap oil, great deal. But there is a catch, a multi-billion-dollar catch. The US giants aren't buying this because they're smart. They're buying it because they're addicted. The refineries on the US Gulf Coast aren't your standard buyers. Decades ago, the industry made a massive bet. Back in the 90s, the smart money was terrified of peak oil. They were convinced the light, easy stuff was running out. The future was going to be heavy. So they sank billions into infrastructure designed for one specific purpose: to digest the cheapest, nastiest, heaviest garbage on the market. Think of these refineries like cast iron stomachs. They built massive cookers to crack heavy, dirty molecules that no one else wanted. But here is the catch. The system is now a prisoner of its own design. Those billions in sunk costs have become a trap. These refineries cannot simply switch to the light, sweet, clean oil produced by US fracking. It's like trying to feed a lion a salad. To remain operational, this machinery demands heavy sludge. The system is physically starving for it. So this isn't a strategy, it's a dependency. And with sanctions on Russia and chaos in the Middle East, Venezuela isn't just an option. It is simply the only dirty lunch left on the menu. I see comments like this all the time. People pointing out the basic chemistry. Hey, there are two types of oil, dark and light. The logic is simple. Venezuela is sitting on the dark stuff, but they need a mixer. The US has the light stuff, but we need the heavy crude. So we trade. And honestly, they have a point. But only after 2010. That's when the shale revolution exploded and everything changed. Suddenly, the US wasn't running out of oil, we were drowning in it. But there was a problem. It was the wrong kind of oil. It was lighter fluid, super light, super volatile. And those cast iron stomachs built for heavy junk, they couldn't digest it. So, technically, yes, the US needs the heavy stuff. But to pretend the leverage is equal, stop right there. That is a false equivalence. Sure, both sides need to mix, but the consequences of not mixing, completely different. If the US is forced to run on pure, lighter fluid, the refineries still run. Is it efficient? No. It burns through margins. Now, look at Venezuela. Take away overseas lighter fluid, it doesn't just run inefficiently, it doesn't run at all. It turns into a solid brick in the pipeline. Physics takes over. It physically cannot move. So, if the trade stops, the US takes a pay cut. Venezuela has a heart attack. This chemical mismatch, it didn't create a partnership, it created a chokehold. Just look at the timeline. Less than 1 month after the fall, the doors are wide open. They aren't negotiating, they are gasping for air. Physics didn't give them a choice. It made the decision for them. For decades, the regime sold the people a beautiful story. Sovereignty, independence, and standing up to the empire. It sounded heroic. But in a country built on extra-heavy crude, independence is a lie. Physics doesn't care about your flag. This specific oil cannot flow alone. It needs a partner. It needs a diluent. To avoid depending on Washington, they handed their fate to Beijing and Moscow. But as one local put it, "You think the Americans want to exploit us? What do you think the Russians and Chinese want? Our omelette recipe?" They simply swapped a boss for another. China took the oil to pay debts. Russia sent nuclear-capable bombers to import South American arepas. Neither could fix the milkshake machine. Neither could cheat the geology. The slogans were loud, but the machines went silent. But let's be honest. Strongmen? And their slogans? They are always so sexy. So, will this new deal fix everything? Honestly, we don't know. Maybe next time, when an ambitious strongman stands up and enforces about glory while the pipes rust, we might spot the lie a little earlier. We might finally realize that physics always wins over politics. But, will we? That concludes the strategy session. To keep your seat at the table for the next breakdown, look down and make that subscribe button grey. Meeting adjourned.